Quick tips for playing the stock market. Although many people worldwide have started to invest in the stock market, a shocking number of people dive into investing without educating themselves on the topic first. Many of these people haphazardly invest money and unfortunately see no return for their investment. Watch the stock market closely before beginning to invest. Before you make your initial investment, try studying the market for a while. The best way is to monitor it for a period of 3 years or so. This will give you a view of how the market operates and increase your chances of making money. Stocks are more than slips of paper. While you own them, you are also a part of a group who has ownership in the company. You are granted a right to earnings and a claim on assets that belong to the company. You can often make your voice heard by voting in elections for the company's corporate leadership. Before you do anything that involves investing with a broker or trader, find out the fees you must pay. You need to know the cost of both the entry and deduction fees. These may add up surprisingly quickly. Exercise your shareholder voting rights if you as a holder of common stock. Voting normally happens during a company's shareholder meeting held for shareholders or by mail. When you choose an equity to invest in, you should invest no more than 10% of your capital funds into this choice. By doing this, you won't lose huge losses if the stock crashes. Don't make an attempt to time the markets. History has shown the best results go to those who steadily invest equal amounts of money into the stock market over a greater period of time. Just figure out how much of your personal income you have to invest. Then, make a habit of investing regularly, and stick with it. If you want to have the full service of a broker but also make your own choices as well, consider connecting to a broker that has online options as well as full service when it comes to stock picking. This way you'll be able to dedicate part of it to a professional manager and still handle part of it yourself. This hybrid strategy lets you to have the help of professional investment advice and also practice your stock actions. Short selling might be an option you should consider. This strategy involves making use of loaning stock from your broker. The investor will resell the shares which can be bought again when the price in the stock drops. Do not invest a lot of your money into a company for which you are working for. While it can fill you with pride to own the stock of your employer, it also carries risk. If your employer makes bad management decisions, you may lose your paycheck along with at least part of the value of your portfolio. However, if you get a discounted rate on shares, it can be worth investing some of your money in the company. Don't let your own company's stock too heavily. While it is fine to support your company by purchasing stock, you will want to diversify your portfolio more. If you are mainly invested in your company and it does poorly, you will have no safeguard against an economic downturn. After reading this article, you now know more about the stock market. You are hopefully now better prepared and ready to start making profitable investments in the stock market. Do not forget that you need to take risks if you want to achieve success. Use everything you know to your advantage and keep learning as you continue to progress.